Hi, everyone. I'm Maggie McGrath, Senior Editor at Forbes. Economic data that has come out this week is showing a mixed report as to the health of the broader U.S. economy. January and February data looks somewhat strong, but it's getting softer as we look at March and April. And the big question is, how much of this is because of President Trump's tariffs and the market volatility that has emerged as a result of the uncertainty around these policies? Joining us to discuss all of this is Spencer Hakimian. He is the founder and chief investment officer of hedge fund Tolou Capital Management. He is also a Forbes 30 Under 30 alum. Spencer, thanks so much for coming back.
Maggie, good morning.
So before we started recording, you and I were talking about some of the data that's come out this week. We've had some jobless claims. We've had a look at first quarter GDP, and we continue to see earnings coming across corporate America. Let's start with GDP. As an investor, what jumped out at you from this report?
There's two things that really jumped out at me, and I hate to be the bearer of bad news, but neither of them were so positive in my lens. The first thing was just the headline print, that everyone saw. First quarter GDP contracted by about 0.3% on an annualized basis, and that mostly had to do with the fact that net exports, which is just exports minus imports, had fallen substantially on a rush from American businesses and households to buy some of those imports before this wave of tariffs came into place. But I think possibly more importantly here is that real personal consumption, which at the end of the day is the engine of our economy. This is households going to buy breakfast in the morning, going to buy clothes to go to work, car payments, everything that the real economy depends on is really slowing down at a rapid pace. So if we go back to the fourth quarter of 2024, that figure, real consumption, grew at 4% on an annual basis, which is very strong and indicative of a very healthy economy, which in my opinion, we had at the end of 2024, and I believe the data corroborates it. Now, if we go to the first quarter of 2025, that figure has already fallen to only 1.8%. So we've had a 220 basis point fall off in real consumption. And mind you, Maggie, the first quarter of GDP, it measures the time period of January 1st until March 31st. So there were no tariffs in place yet, right? There was no Liberation Day had not happened yet. The auto tariffs came on April 3rd. The Mexican and the Canadian tariffs are still being delayed. The steel tariffs, although they were somewhat in place, they really hadn't in earnest gone into effect until mid-April. So what I'm worried about is we're already seeing such a sharp contraction, or not a contraction, but a slowdown in the growth of real growth. And we haven't even gotten to the point that prices have spiked or that businesses have potentially started laying off people. So I think something that would be worth talking about on this show is how the data is progressively getting a little bit worse as the weeks, as the months, as the days go by. And I think there's a lot of evidence to show it.
Some of that other evidence, you were talking earlier today online about jobless claims. They came in a little higher than expected. And then you also reposted a story noting that 24% of Americans are scrapping plans to make a major purchase like a home or a car due to tariffs. So what does this all lead to potentially?
At the end of the day, the economy is interconnected, right? I spend, which is somebody else's income, which lets them hire employees, which lets those employees then spend back in my business, which becomes my income, which lets me hire employees, which lets the whole cycle going. What people I think should really understand, because it's been a really long time since we've had a proper quote unquote recession, is that these things become self-fulfilling and it's a snowball effect, right? It's the person that forgoes buying a car because it's 20% higher. Well, then, the car dealership starts laying off people. And then the people that are at the car dealership that, every Sunday, they like to go with their family on a family dinner, they stopped going to that dinner now because their income their income fell in half because one person in the family got laid off. And then that restaurant owner, all of a sudden his or her sales fell, so he lays off a chef. And then because he lays off a chef, the chef's landlord doesn't get paid rent. So these things tend to compound, and they tend to compound very quickly. So what I am really looking for right now are the forward-looking data points, or the more localized immediate data points that are showing some things. And unfortunately, I'm seeing it a little bit in jobless claims. It's going up. It's evidently going up. Continuing claims is also going up. And then in things like construction spending, right? That fell negative 0.5% month over month. So on an annualized basis, construction spending is down 6%. Why do you think that is? Well, if 25% of Americans are going to delay buying a home, who's going to build a house and get stuck with inventory? So the signs are there, if you ask me.
So, what is the likelihood the US tips into a recession this year, if you were to put a percentage chance on it?
So again, as I've been saying on the shows a few times now, this is really still all contingent on whether we course correct, right? Unlike, let's say, the COVID pandemic, where we needed a vaccine to be produced, or in 2008, where it took years to rebuild bank balance sheets and household balance sheets that had lost their homes. This is a unique crisis in the sense that one person at any point in time can stop it. It could be stopped right now. But with that being said, when we spoke for the first time a month ago, none of the effects of these tariffs were in place. So at that point, the likelihood of recession was much lower. Now that it's been 30 days since Liberation Day, or 29 days, right? We have cargo that has simply not come from overseas that had to come here. We already have jobless claims going up. We already have construction spending going up. So some damage is inevitable. If you were to ask me, I frankly do not see how we avoid a recession at this point. At this point, what becomes the more interesting question, if you were to ask me, is how severe does this have to get? And again, it's the same idea. One person at any point in time can choose to stop this, and we will halt the severity here, right? There's going to be problems. Spring looks like it's going to be very tough with inventory. Memorial Day doesn't look so good. Back to school doesn't look like it's going to be so good for all the retailers. But maybe at least we can save Christmas at this point, right? So at this point, we're just talking about how severe. I don't think it's a question anymore of will the economy slow down. I don't think anyone in good faith can argue it's not. The data is already showing it. So I don't see how we cannot, but we can still mitigate the severity of it, which I hope we do, but I'm frankly losing confidence by the day.
And when we talk about losing confidence, you posted something yesterday about you have friends in banking and across Wall Street, private equity, et cetera, commercial real estate in DC, in New York, who are in touch with the administration. And I'm paraphrasing here, but it seems like everyone's losing a little bit of faith. What does Wall Street think of the Trump administration's ability and President Trump's ability to do the course correction that you just said we need?
Well, capacity to do it is there. There is no doubt that if the United States president and the White House wants to course correct, they can do it, right? This is not a question. This is not a question of competency. This is a question of desire. The desire, we don't know if it's there or not, right? We simply do not know if they want to course correct. Some of them appear to really want to do these tariffs. Despite all the evidence to the contrary of how bad it appears it will get, some of them, Peter Navarro, Howard Lutnick, the president himself, they really appear to want to be doing this course of events. My tweet was about something that I've just been hearing a lot, and I really felt it was important to speak up about. People that are getting FaceTime, specifically at investment banks, commercial banks, pension funds, hedge funds, with the administration. Not that they're talking to the highest level. So they're not talking to Scott Bessent. They are not talking to, the director of the Commerce Department. They are talking to the staffers, the anonymous people that get no glory, that do the day-to-day work of actually fulfilling the tasks of what the administration wants to do. They are saying the level of competency for those people is simply not there. Regardless of whether the policy is a good idea or not, regardless of whether the idea of tariffs is good or not, the fact that we have story after story of United States Customs invoicing the wrong tariff level and then having to refund companies and then coming back a week later and saying, hey, we actually charge you too little. We have to actually charge you more. That is not a question of policy. It is a bad policy, but that's a question of having just poor, like employees. That is just a question of not having a good skill set. There was a paper in the Financial Times a few days ago that a group of hedge funds that were bond focused hedge funds were speaking to some people on the Council of Economic Advisors, and they came out of that meeting and they told the Financial Times, these people don't know what they're talking about. Like they wouldn't get jobs at our companies. So regardless of policies, I think we should all agree, we as Americans, regardless if it's Republicans or Democrats, we are entitled to the highest level of competency from the people that are working on our behalf. Nobody at Forbes, as an example, that does a careless job would have a job for so long. So that's all I was saying with that tweet.
Still, I think it's important, right? Because in a moment of economic delicacy, if you will, it is a delicate time for our economy. I think as a consumer, as someone who's worried about her savings, this is me speaking as Maggie, not as, journalist, I want to know that the people who are handling it have the competence to handle it. So I guess my question is, what is Wall Street's message to the administration? What's your message to the administration right now?
You're absolutely right to feel that way. Who would not? You work very hard for your money. Who would not want their money to be in good hands? That's just the most basic evolutionary human desire to be taken care of for what you deserve. I think ultimately I cannot speak for all of Wall Street, but I can speak for myself, and I think this is fairly consensus on Wall Street. I don't think my phone is going to be ringing with what I said right now. The negative impact is obvious. I mean, there's no positive data coming out. Look, even corporate earnings, for the first quarter, they're reporting strong numbers, but they're not willing to guide for the second quarter. What does that mean? This is so simple. They just said they had a pretty good quarter, and now what changed? They're no longer willing to guide. You never hear that on Wall Street. On Wall Street, when somebody has a great quarter, the CEO, the CFO, everyone comes out and they tell their investors it's getting even better. Buy more of the stock. Believe in us. Look how good we just did. What company goes from reporting an earnings beat to not be willing to even give you guidance? So it's evident. So the simple message to the administration is we should course correct here. I know, as an example, maybe we just pause, as we did the 90-day pause with all the other countries. Maybe we just pause with China, right? Maybe in the interim, while we are negotiating new trade terms with China, albeit I do not know how successful they'll actually be because they frankly weren't successful in 2018. But let's leave that aside. Let's give the administration the benefit of the doubt here. Why don't we at least pause the current action while we are negotiating, right? In a sense, because right now we cannot do business with China, right? 140% tariff on China is effectively an embargo. You're going to get empty shelves any day now. There's no way around that. So, I mean, this is effectively, this is like, you're negotiating fire insurance on your home, but in the meantime, you're burning down your house. Well, why would you do such a thing? Why don't you negotiate the rate on your fire insurance without your house burning, right? Who gets more leverage at this point if our economy goes into the dumps? It's the Chinese probably get more leverage if we light everything on fire and then we negotiate with them, right? We come from a point of weakness because we're going to have angry citizens. We're going to have unemployment rise. We're going to have inflation rise. We're going to have the GDP fall. Obviously, the Chinese are paying attention. Someone like me in New York on a Bloomberg terminal can figure this out. Of course, the Chinese know about this too. So, my basic message to them would just be pause. Just pause this while you negotiate. Don't light the house on fire while you're negotiating with them.
Before I let you go, I want to ask you about the market and specifically what it's been doing recently, and also whether President Trump's comments about this is the Biden stock market, if that holds any water. What do you think about the movements of the market and whether or not we can assign credit or blame to any one president?
Look, Maggie, I'm not a Republican. I'm also not a Democrat myself. I make that pretty clear. Um, and just to prove that I'm not a partisan, I thought, quite frankly, it was a little pathetic in 2022 when President Biden blamed the runaway in inflation on the previous administration. So, just like it was pathetic to me in 2022 and 2025, it is pathetic to me when the president wants to say that when the stock market falls, it's Biden's fault, and when the stock market rises, conveniently, it's back to his credit. Um, with that being said, um, there, there, there's only so much that a president can, in normal times, affect the stock market because thankfully we have a system of checks and balances, right? We don't have a king. We have a temporary president, an elected official. We have three um, separate branches of our government, right? So there's only so much that a president can affect. Let's say if President Biden in the past had a good or a bad idea, well, that was still contingent on the House and the Senate approving it, and that was also contingent on, you know, the judicial branch to render that legal. So, but what's going on here with tariffs is clearly a unilateral action. The Senate Republicans had a chance last night to vote down President Trump's unilateral tariff power, and they chose not to. Um, so just as a matter of just let's be real with each other, this really is one person's doing. Um, and again, look, what I keep saying is even if this does not lead to catastrophe, what good is coming out of it, right? People were really happy that the market was flat in April. We're happy about that. I mean, that's something to cheer for, right? Like we've lowered our standards so much that not losing 5% of our asset prices a month is something to be happy about. Asset prices are supposed to go up. We take tremendous risk to own assets, right? Why would we expect them to go up in price? So, people are cheering that it was flat last month. I mean, give me a little bit of a break on that. And yeah, that's just my general takeaway on that.
I think that is a fair takeaway. And as always, Spencer, we so appreciate your thoughts and analyses on the markets, on the economy, and what the administration is doing to kind of navigate both. I'll have to let you go for now, but we will have you back as this quarter continues and as we continue to get economic data that affects the markets. But in the meantime, Spencer Hakimian, thank you so much for joining us. We really appreciate it.